That's an increase of over 249%. That's explosive growth.
It's a sector full of explosive growth opportunities, but biotech investors beware.
These are very volatile stocks, especially in the small cap sector.
But if you know what to look for in this field, biotech plays can be highly profitable.
What's creating the bullish interest right now is that there was positive clinical trial news.
MarketBeat's Chris Markoch shares a list of 3 small cap biotech plays with major FDA moves underway right now that could lead to explosive growth ahead.
That's a gain of over 117%.
Could these risky biotech plays lead to your next big reward? Let's dive in. Chris, so great to have you back on the show today talking about a really exciting sector, and that's small cap biotech companies. You have a really great list for us today of 3 biotech companies that have explosive growth potential ahead. I'm excited to get to the list, but before we get to the stock names, I just want to talk about investing in biotech companies in general. What should investors be prepared for in this really kind of volatile sector?
Well, actually, I think you hit the nail on the head there, Bridget. I think investors that are looking to invest in the sector can expect and should expect volatility. And that's why, for a lot of investors, they just stay away from the sector completely, especially for the small cap names, because there's a lot of science that goes into this that for people that are not familiar with medical terminology or the drug development process, that may get very confusing. And even if you're relying on analysts' ratings and such, this is still a volatile sector. Stocks can go up and down significantly based on milestones that they hit with the FDA or milestones they don't hit with the FDA. So these are very volatile stocks, especially in the small cap sector, and that can be very tricky for casual investors who just don't necessarily have the time to devote into really digging into and understanding what these companies are all about.
Yeah, we've heard from investors who've been burned by biotech stocks. We've also heard from investors who have made quite a huge profit on biotech stocks because if you catch a company right before it gets that next major FDA approval or launches a new drug, then you can do really, really well with these. But one bad headline in a biotech company or a biotech stock can take another big crash. So be prepared for that as you get into the sector. I think the most important thing is following that FDA approval. Talk about how important those announcements and those approvals are for the stock price.
They're vital, and the reason for that is because let's take it out of the realm of biotech for a second, and let's look at something like the flying car space, the eVTOL space. Companies like Joby and Archer are looking to work through the FAA timeline, and every time they get past one of those milestones, it's bullish for the stock because it adds credibility to the idea that these are going to become commercial vehicles and there's going to be a revenue case and there's going to be profit down the road. It's no different in the biotech sector if we take it that way. The FDA is that same way. These companies get drugs in the clinical trial stage. That's the first step, but then they have to get through a stage 1 and then maybe a stage 1B and a stage 2 and maybe a stage 2B and stage 3 and on until they can actually get the drug into commercial production. But each time they get past one of these stages, that's like a toll booth and you can check it off and say, okay, they got through this. It's one step closer to that company getting this drug commercially available.
And keeping track of all of those approvals can be exhausting because, Joby and Archer, there's just a couple of companies in that field, but biotech, there are so many companies working on different drug development. So trying to stay on top of it can be challenging. And that's where MarketBeat comes in with a brand new tool. Chris, talk about this new FDA tracker that's a free tool that investors can use.
This is a really exciting tool that MarketBeats developed, and you emphasized one of the keywords about it is it's a free tool. Every investor can use it. And what it allows investors to do is track what companies are doing in regard to getting FDA approval for their drugs. So if you go to the market data tab on MarketBeat, you'll see a click for FDA events calendar. And if you click on that, you get to a screener. And if investors who have used the MarketBeat site before, they're very familiar with our screening tools. And you can screen for the company, the price. You can search for specific drugs if you know the name of the drug you're looking for. And then the last column on the right is called event. That's sort of where all of this comes together. So you might see a stock on the list, and you might say, why is that stock up so much? Or why is that stock down so much? The event tab is where you can sort of get that information because it gives you what a recent event might have happened with that company. It'll give you a summary of what happened in the event. It'll give you sort of a short synopsis of what might have happened. And that's a good start for research. You can sort of figure out, okay, is this something that investors are overreacting to, or maybe they're not reacting enough? Maybe there's a more bullish case here than you first thought.
And that is what all 3 of the stocks on
Yeah,
your list today have in common. I'm excited to get into this list. Again, we are talking about 3 small cap biotech
right,
companies, all of them under about $30 right
right.
now that have explosive growth potential ahead. So let's get into that first company on your list.
So the first company on the list is a company called Eurogen. Now, ironically, this is one of the ones that I found with the screener. It's one of the ones that comes up. It's probably within the first 5 or 6 names that I found, and that was without even screening for small caps. When you screen for small caps, it moves up a much higher. Eurogen is again, this is a small cap company, but its singular focus is treating urologic cancers and diseases. Now, the exciting part about this company, one of the exciting parts is it already has commercially approved drugs. Now, one of those drugs is a drug called Jelmylo, Jelmylo. It features Eurogen's proprietary RT gel technology. And this takes drugs that are in liquid form and it allows them to become more gel-like when they get into the urinary tract, and it allows the drugs to have a longer efficacy. The stock has shot up, it's about 43% in 2025, with much of that gain coming in the last month. And one of the reasons is because the company is trying to get an expanded label for Jelmylo, which currently it's only approved to treat a rare form of kidney cancer, or at least your bladder cancer that originates in the kidney, and they're trying to expand that out to low-grade bladder cancer, which has a much larger addressable market.
Yeah, a really interesting concept, and that's why the stock is seeing so much growth right now. I think for investors looking at biotech, if you've been in biotech before, when they see a big spike like this, sometimes it can be hard to think about should I invest when a company's already up so much? Is there more upside coming? Is now a good time to get into this one?
Is there more upside potential? According to the analysts, absolutely, which was another thing that was very intriguing to me about the stock. This has a consensus buy rating. It's covered by about 8 analysts, which is good when you're talking about a small cap biotech, and it's got a consensus price target of $32.86. The other side of that coin is I believe that a lot of the run up you've seen in the last 30 days might be due to short covering. This stock has over 42% short interest. That's huge. And what that means is that once this stock started going up, you had probably a lot of people who were in short positions that had to cover it. You're starting to see since the beginning of July, the stock has sort of stabilized a little bit. It's gone down a little bit, but now it's gone back up. So I think the stock's trying to find that equilibrium point. This is always a time where you have to be a little bit careful. People who aren't in the stock right now may want to wait for a little bit of a pullback, but it looks like this stock has much further room to grow, especially since they're supposed to be getting those results on Jelmylo in the second half of the year. And if those results come out positive, the stock can go much higher.
Yeah, that's always the bet is if it works out, this stock could go really, really well. If it has bad news, you could see the opposite happen. So keep that in mind as you're looking at this investment, but a lot of good potential here if you are able to have a little bit more risk in your investments. If that's you and you are looking looking for more of these high risk, high reward plays right now, check out our latest free premium article just for our YouTube viewers. It's a list of 5 high risk, high reward stocks that all have serious momentum right now. The article just came out this week and has some really exciting names on it that you don't want to miss. So scan the QR code now or click the link in the description of this video to get that free list right now on marketbeat.com. Well, let's get to the second name on your list, Chris.
Okay, so the second name on the list is Nectar Therapeutics. Ticker symbol is NKTR. So one thing that investors are going to notice about this when they look at the stock chart is it's up about 78% in 2025. That's incredibly strong growth. But even with that said, it's down 93% in the last 5 years. And that's because this is a company that's had a history in those years of some high profile drugs that have failed in clinical trials. That's the risk of this sector. You can have companies that miss on these clinical trials. But what's creating the bullish interest right now is that there was positive clinical trial news about the company's leading candidate for treating systemic lupus and ulcerative colitis, among other conditions. It delivered positive phase 2b clinical trial results, and it got a fast track designation from the FDA. So that means that obviously it's going to be on track to get these drugs approved commercially faster. Now, again, this is a company that doesn't generate a lot of revenue right now. It's not profitable yet, but analysts believe the stock could move higher.
It's good to know that analysts are behind this. I do want to see how much growth they're expecting for this company. And also, very interesting that this company has seen such a downtrend for so long. To see it finally starting to move back up is a good sign, but maybe even more risk in this one.
I don't think the risk I would say is any different. I think again it comes down to whether or not these stocks can actually get through the clinical trial phase. Now, you asked how much upside. Well, of the three stocks here, this one has the most explosive upside. Again, 7 analysts are covering the stock, which is really good for a stock like of a small cap like this, and they give the stock a price target of $88.33, and that's an increase of over 249% from where its price is as we're taping this today. So that's explosive growth that they're seeing could happen in the next 12 to maybe 18 months. That tells me that these analysts are expecting that the drug is going to continue advancing through these trials and is probably going to be approved by the FDA sooner rather than later. And short interest on this stock is around 10%. Now, that's not as high, obviously, as what we were just talking about with Eurogen, but something that investors should watch is that short interest has jumped about 100% in the last 30 days. So that's something to watch.
Yeah, definitely more interest in the stock right now. I also think it's interesting to look at that FDA timeline on the stock page too. You can find that on the tab, and it shows really interesting history, kind of spelling out some of the stock moves that you were just talking about.
The biggest thing with this stock right now is that it has that fast track approval, which is really important. And another thing, I'll make one last point on this one, Bridget, is the company has cleaned up its balance sheet quite a bit, and the good news about that is that that means they've probably got enough cash runway to get the drug into commercial approval without having to do any other share offerings, which means there shouldn't be a fear of dilution in the stock.
A very good second pick. Let's move on to that last stock on your list of 3 small cap biotechs that have explosive growth potential.
Now, some investors might not consider around 33% upside growth explosive, but the last company is Verve Therapeutics. The ticker symbol is VERV. And one of the reasons why I wanted to put it on this list is because it's in the field of gene editing, which is an explosive segment for the biotech industry. A lot of investors are familiar with some of the bigger names here. CRISPR, they're familiar with maybe Beam Therapeutics. So Verve is a small cap player in this space, but one of the things that they're doing is they're very focused on using gene editing to treat cardiovascular disease. This is a clinical stage company. It does not have any commercially available products. Investors will see some revenue on its balance sheet. That's generated primarily from partnerships and equity offerings that it's made. But the company was just approved to do a phase 1b US clinical trial for its lead candidate, which is Verve, VERV-102, that started early this year. So the drug uses a CRISPR-based editing therapy, and it's designed for a one-time use to target the gene that drives high cholesterol and atherosclerosis.
Both of those things are very common issues. So there's a widespread potential use for this drug if it again gets through that approval phase. So I'm curious why analysts think there's only about a 33% upside. That's not a ton of growth for a drug that has potential for such widespread use.
Yeah, I think, Bridget, the reason for that is because this probably has the longest timeline of the other drugs. So investors may have to wait a little bit longer before this one crosses the finish line. So they may be just looking at this and saying it's going to take longer. So they don't want to sit there and say the stock's going to explode higher right now. But one of the things that I'm really bullish about the gene editing therapy segment as a whole is if the promise of this sector happens, I think you're just gonna see a lot of explosive growth in a lot of stocks because you can just imagine the potential of all of these stocks and what it may mean for just the treatment of a lot of diseases in general.
Yeah, really good point, and a really great list, Chris, of 3 biotech companies for investors to consider. I wanna finish off with just, looking at these biotech companies. We talk a lot to long-term investors. We also talk to people who are looking for more short-term gains. For biotech companies, do you think that there's, a use case for both types of investors, or do they lean more towards one or the other?
You know, I'd like to say that, I'd like to say that they lean towards the long-term investor, but let's face it, a lot of traders like to get in these spaces for all the reasons we just talked about. They can look at the FDA calendar, they can kind of try to time their trades based on what they believe is gonna happen. Is there gonna be an approval? Is there gonna be is the company gonna miss, and they do that. But if you're looking, I think, for the long-term gains on these stocks, the plan is pretty simple. You try to find the companies that you believe have drugs that are going to be game changers, and then you just try to latch onto those companies and you kind of have to ride it out. I think each one of these companies presents an interesting scenario in the fact that I think all three of them are at points right now where there could be a pullback that is opportunistic for investors to get involved.
Some more good advice for investors. Chris, thank you so much for diving into this topic today. I'd love to hear from you. Have you been burned by biotech companies before? Have you made a lot of money from these companies before? What are some names that you are looking at? We'd love to hear from you in the comments. Thanks again for watching, everyone. And as always, happy investing.